Welcome back. Whoa, it's been a rally mode for markets, that's for sure. Yesterday, another big day on the heels of the president's comments on tax reform. Take a look at where we stand. We're expecting the Dow Industrial to be up about 20 points at the open. It closed at another all-time high yesterday, following remarks from the president on possible tax reform. Watch.
We're way ahead of schedule, I believe, and we're going to be announcing something, I would say, over the next 2 or 3 weeks that will be phenomenal in terms of tax.
It's going to be a comprehensive plan, something we haven't seen since 1986. It's been since 1986 that something like this, of this scale and magnitude, has happened. The president recognizes that middle-class Americans need tax relief, and that's going to be part of that. You're going to have to wait a couple weeks before we put out that outline.
He's listening. Yesterday, in particular, we were all over this subject, basically saying the administration better come out with real comprehensive tax reform soon, Dagan. I guess he's watching the show.
And bearing down on the House Republicans to get on board with a plan. Where were you as now President Trump was running for the White House, and this is what he talked about over and over and over again.
Especially our Sean Duffy interview yesterday. I felt actually bad for Congressman Duffy. We were blaming him, but you basically said to him, look, it looks like you were flat-footed. You didn't even think he was going to win, and where's the play now? Anyway, we're going to get something in 2 or 3 weeks, according to the president. And joining us right now to talk about the impact is S&P Global Senior Director Rich Peterson. Rich, good to see you. Thanks so much for joining us. So the market's rallied on those comments. What's behind it? How do you see it?
Well, obviously, it's about earnings. You know, the S&P 500 is supposed to earn about $132 per share this year. At current valuations, we're about 17 times this year's earnings. So, they're talking about dropping the tax rate maybe from a statutory 35% to 25%. If you do the arithmetic, that would boost earnings per share from 132 to about 145. You put the 17.5 multiple on 145 per share, you get an S&P 500 target maybe over 2,500.
And the idea is that if you lower people's taxes, they will respond by buying stuff and investing in things. And yesterday, Kevin Brady joined Neil Cavuto. I thought it was a fantastic interview with Neil. And Kevin Brady, who's been the lead guy working on tax reform, governor, said for the middle class and the lower earners, it's going to be big. It's going to actually be a significant tax cut.
And I think that's important, but I want to go back to the point that the corporate tax reduction is huge. Donald Trump can just mention it and the markets go up.
Yeah.
Imagine what happens when we actually do it. But the reason we've got to do a better job of explaining to the public, because they think corporations get tax reduction, what they don't understand is corporations don't pay taxes. They pass it on to their customers. And so the end user is the consumer. Cut the corporate tax rate, jobs increase, productivity increases, inventory increases, prices go down. Look, I'm not trying to make it like a magic elixir, but, Rich, I think you'd be the first to admit that if you take that corporate tax rate down, there is a powerful cascading effect across the economy.
Yeah, we saw that in the 1980s with the Reagan tax cuts. We saw that even with the Bush tax cuts in the early 2000s. But really the devil's in the details. We don't know, when it will take place, the magnitude, if in fact it will be retroactive or not. So we'll wait and see to make a judgment on the final impact.
Well, we've been dealing with the devil for a long time in high tax rates, and that's the devil.
Well,
that's the devil that is killing the economy and jobs.
That's actually why Steve Moore and Art Laffer said, don't worry about paying for it, and that goes to the border adjustment tax, which raises $1 trillion over 10 years, and that seems to be one of the biggest sticking points. Steve Moore said, even before the inauguration, just do the corporate tax cut, do it quickly, just cut the rate, period, and move on and get that done immediately rather than talking about something comprehensive.
Yeah, but
we've kind of gotten off track with all the other things going on in the administration so far.
It's the Committee for a Responsible Federal Budget who came out with a report yesterday and said President Trump's historic debt dilemma, that he's taking office with higher levels of debt as a share of the economy than any other president since Harry Truman. Of course, under President Obama, debt doubled.
Yeah.
From $10 to $20 trillion.
If he can lower the corporate tax rate, get more businesses to have an incentive to stay here, obviously, like you were saying, we can do a lot of things with the money trickle down to individuals, but he's also talking about getting rid of the taxes, the federal income tax for $25,000 a year for individuals and $50,000 a year for married couples. And I think that's huge. If you can get the people to support you, I don't think they're going to care about all the other policy decisions. If they see all of a sudden they have zero federal income tax, they're going to get supportive of Trump, whether they were before or not.
Yeah. Well, we'll see if they actually respond by increasing spending, increasing investing, and actually that cycle of economic growth continues. Before you go, Rich, we've got to talk about the current quarter.
Sure.
It's better than expected. Profit growth in the fourth quarter was?
Right now we're at 6.8%. About a month ago we were at 4.1%. Obviously financials are the big winner, up over about 14% earnings growth. And you're looking at we're midway through the first quarter of 2017. Now analyst expectations are looking at about 12, 13% for the first quarter. Again, financials are going to be a leader, followed by information technology. We're up 3% on the S&P 500 so far since the start of the year, over 10% since the start of or post-election. So it's been a great boon.
Why are we going to see 13% profit growth in the fourth quarter? I'm sorry, in the first quarter, on top of 6.8% in the fourth quarter. What's going on in the first quarter that you're seeing such strong profit growth?
Financials, technology, consumer discretionary, they're going to be the strong drivers going forward.
And the year for 17?
Double digit. We're looking at about 12, 13%.
12, 13%.
Yeah, and energy, is it going to get better? Because I think that.
Well, I mean, you're going from the tailwinds or the headwinds to the tailwinds, where you had so many negative comparisons. Now you'll start seeing some positive comparisons because you're coming from such a low base from 2016. So you see maybe low single-digit growth, but it will be growth.
It's called growth, right?
We'll take it.
Exactly.
Because energy, I think, was down 78% or something in the fourth quarter, right?
It was very horrendous comparisons.
All right, we'll leave it there. Rich, great to see you.
Great to be here.
Thanks so much. Rich Peterson, S&P Capital IQ.